session is Conference Synthesis and Closing Reflections. To present that this year, we have Ms. Joni Teves, Chief Precious Metal Strategist, UBS Investment Bank, and Ms. Suki Cooper, Global Head of Commodities Research at Standard Chartered Bank. They have put in all the hard work in the last 2 days while we were busy networking and increasing our business opportunities. To present the conference summary and the synthesis and closing reflections, over to you, Joni.
Hi, everyone. Good afternoon. Time certainly flies when you're having fun, and I can't believe that we're now approaching the close of this year's conference. Thank you to the SBMA, to Albert, Margaret, and the organizing committee led by Vatsa for such a great lineup of sessions this year. For those of you who have been attending this conference over the last few years, and specifically attended these wrap-up sessions, you might recall that I try to get out of doing this every year and obviously have failed. This time, though, it has been easier to agree to coming up here and doing this again, because I get to do this summary session with my friend Suki, and also with a little help from my friend ChatGPT. Joking aside, I do feel extremely honored to have witnessed how this conference has grown over the years, and to be part of this crucial milestone that the industry has taken this year with the announcement made by Deputy Prime Minister Gan yesterday. Reflecting on what we've heard over the past 2 days, Suki and I will try to capture the key themes that has emerged over the different sessions, and perhaps most importantly, what they tell us about where the industry is heading. So there are three key takeaways for me to start with. First, Asia's importance in precious metals markets continues to grow, and market infrastructure is beginning to catch up with that reality. Second, trust remains the industry's most valuable asset, whether expressed through governance, transparency, standards, regulation, or infrastructure. And third, the future will belong to markets that are connected. So connected across countries, connected across time zones, connected between physical and digital ecosystems, and connected through collaboration. This year's conference has felt different because we moved beyond discussing possibilities. We actually saw concrete commitments. We saw infrastructure being built, and we saw collaboration taking shape. And we saw a shared vision emerging for the future precious metals in Asia. The end of the beginning, as Albert Chang said. And, the next chapter starts now, which reminds me of the semisonic song that goes, "Every new beginning comes from some other beginning's end." So for those of you who, I'm dating myself now by referring to that song. So when I look back at this conference, I think there are two words that really capture it best: trust and collaboration. Trust was a thread that connected almost every discussion we had, whether we were talking about digitalization, market infrastructure, regional connectivity, or the future of Asia's precious metals markets. We began the conference with the welcome address by Mr. K.L. Yap, who highlighted the significance of having Deputy Prime Minister Gan, which signals the importance of Singapore on the precious metal sector and the strong partnership that exists between the industry and the government. The Deputy Prime Minister's address then set the tone for everything that followed. His central message was clear. In an increasingly fragmented and uncertain world, trust itself has become a form of infrastructure. Investors today are not simply looking for returns, they are looking for jurisdictions where assets can be stored safely, traded reliably, and governed transparently. And importantly, this is no longer just a vision. We heard several major announcements that demonstrated tangible progress. The development of a local Singapore OTC gold clearing system through SGX, the introduction of MAS central bank gold vaulting services, new gold-related capital market products, and the removal of the 5% cap on physical investment in precious metals under certain tax incentive schemes. These are not theoretical discussions anymore. The conversation has moved from why Singapore should build this ecosystem to how we now execute it. Albert reminded us that while this year's announcements are exciting, the next phase will involve something less glamorous, but arguably more important. The hard work now has to begin. And that means building rule books, establishing governance frameworks, defining operational procedures, creating participant standards, and ensuring market integrity. The message was that credibility matters more than perfection. Rome was not built in a day, and markets are not going to be built overnight. They are built through collaboration, execution, strong governance, and trust earned over time. Singapore already possesses many of these ingredients required to foster the next phase. Now the task is to translate those advantages into functioning market infrastructure that can support regional and global participation. A recurring theme as well during the first day was digitalization. David Tate of the World Gold Council challenged us to think about the future of gold not only as a physical asset, but as a digital one. His argument was straightforward. Digitalization expands access, it creates new use cases, and increases transparency. Most importantly, digitalization keeps gold relevant. Closely linked to trust and digitalization was another theme, which is transparency. And Ruth Crowell of the LBMA emphasized that trust is built through transparency, whether it is refining standards, trade reporting, responsible sourcing, or settlement processes. Market functions best when participants can trust the information that they receive. And with that, I pass on to my friend Suki for her thoughts on the keynote address of Mr. Heng.
Thank you, Joni. It's a pleasure to be on the stage with you, delivering the wrap-up. I'd say, even though we didn't confer on our key themes, I picked up on two of your words as well: trust, collaboration, and transparency. I think that is a recurring theme throughout the presentations, but also through the conversations that we've had. And diving into our first keynote address, which I thoroughly enjoyed, Asia Pacific in a Fragmenting World, from Mr. Heng Koon Hao from UOB. I thought this was a fascinating presentation because he introduced us to some scary charts. And I think we always need to keep an eye out of what are those risks that are lurking. And gold, of course, is a portfolio diversifier, so lends naturally into this conversation. So I would agree with some of these scary charts. There are some huge price movements that we've seen across the sector, across the commodity space, whether it's the oil markets, whether it's some of the transport links that we've seen being tested as well. So the chart that he said that we should all be looking at, and that President Trump is looking at as well, is US CPI, and we've certainly seen some strong moves there. But it's also one that's left the market quite divided in terms of what that inflation impact might be. Going forward, I think what was interesting here, my main takeaway was that we should look at gold markets not just from the micro factors, the trends that are driving the market, but also from the big picture outlook too. And here we can see that from a regional perspective, we've seen foreign direct investment into the region exceeding $300 billion. We've seen strong exports driven by the AI boom, which was coined as a halo effect. But also, these are the same factors that will drive the need to continue to buy gold. It ends up being a hedge against volatility. So the key question that was being asked here was, why has gold underperformed? And that correlation with oil has certainly picked up. That correlation with real yields has certainly picked up. And that was a theme that was brought up more than once during the presentations that we saw. But also, China is a constant. And that comes back to the Asia region as well. Whether it's from official sector buying, whether it's from retail buying, China is a reason why we continue to see good support on the downside for the gold market. So the other question he asked, or that is frequently being asked, is should you buy now? And one of the recurring themes here again was the gold market still has legs. We're seeing this particularly from a sovereign allocation point of view. We can see rising stocks across Shanghai Futures Exchange. They've risen quite sharply from 2-year-ago levels. But also, if we look at that recent study from the ECB in terms of allocation across the official sector, we can see that gold holdings have also risen. And this does not look like a short-term trend. So overall, yes, we can see price appreciation has led to higher allocation, but also it's that continued demand for the gold market. So I'll pause there.
Yeah, I also thought actually the conversation on central banks during that, or the discussion on central banks and the impact or the, how putting into context the flows that we've seen was quite interesting, given I have been getting a lot of questions on that recently. Moving on to the first session, the Asian precious metals market architecture. Another major theme throughout the conference was the continued shift of precious metals demand towards Asia. And Deputy Prime Minister Gan actually highlighted that Asia now accounts for roughly 70% of global consumer demand. But if there was one challenge identified repeatedly throughout the conference, it was connectivity. And the ASEAN Market Architecture panel highlighted this. ASEAN already generates substantial precious metals activity through imports, exports, trading, accumulation, and investment demand. Yet many of these markets remain disconnected from one another. So the opportunity here is enormous. But to unlock that opportunity, the region does need more infrastructure. So more refining capacity, more logistics capability, more vaulting, better settlement systems, more liquidity. And more importantly, perhaps stronger connectivity between these markets, as well as policy, regulatory, and governance frameworks that allow for markets to interact more efficiently. Several speakers during this panel noted that barriers still exist across parts of ASEAN, ranging from tariffs and export restrictions. Technology and digitalization were perhaps the ways or the tools that were identified that can help reduce these frictions and create a more connected regional marketplace. So the vision for 2030 presented during this session was ambitious but compelling. A region that is characterized by greater liquidity, greater accessibility, stronger collaboration, and trusted standards. And importantly, an inclusive ecosystem where no market is left behind. So a key theme was no man is an island, even though Singapore is technically an island, but leave no man behind.
Moving on to session 2, the roadmap to advance PGM markets in Asia-Pacific region. There were lots of interesting topics that were touched upon here, but there were a few standouts for me, looking at the market from how investment demand has moved the dial, how investors are now approaching the commodities market from a different perspective. Kenny also highlighted that investment really has been a game changer in this market, and also with the launch of the Guangzhou Futures Exchange, that's allowed untapped interest there to really start to find a path in being able to invest in the PGMs. But one of the interesting points that was also made was that we can see from the jewelry standpoint that the market's been under pressure, and we've seen how much it's contracted over the past 10 to 20 years. But the AI side is one theme that has been recurring, not during just the conference, but recurring through many conversations that I'm sure that we've all had with each other during this event, but also with various market participants. And I thought Wei Bin's presentation here, or his comments here, were really insightful, because we haven't really had a chance to dive deeper into what the impact could be more broadly for the complex, but for the PGMs. And he highlighted that there were a few key end usages that the market may not have picked up on yet. Firstly, AI data centers, creating industrial demand, particularly for crystals that are used to transfer the signal for the optical connectors. Here he highlighted the usage of platinum and iridium to grow those crystals. Those are the two PGMs that are used. He also highlighted that that could be, they estimated it around 265,000 ounces of demand over the past 2 years. So that's quite significant for those two PGMs. Then he highlighted the use in humanoid robots, the use of silicon to make facial skin. I don't think any of us were really thinking about new skin from platinum, maybe gold facials, but now we can have platinum facials as well. Here he flagged that demand in combination with ruthenium was an additional growth area. And that could be around about 5,000 tons of platinum growing to maybe 6,000 in 2026, 20% growth area. And then data centers. This one we perhaps would have been more attuned to with the use in hard disk drives and the use of ruthenium and platinum. And then finally, in electronics and the use of high-grade glass fiber, he estimated that demand around 500,000 ounces for platinum and rhodium. So these are all interesting areas. We know that the PGMs are used in very fascinating end usages, but to be able to quantify some of those changes in the market, I thought was fascinating.
Thanks, Suki. And as we move on to session 3, which was the connecting China market via Hong Kong, perhaps the strongest message from the conference, as I mentioned earlier, was that no market can succeed alone. It's all about collaboration. And the Hong Kong panel demonstrated this clearly. Hong Kong's strategy to connect international markets with mainland China relies heavily on collaboration with exchanges, with regulators, with banks, with refineries, and with the Shanghai Gold Exchange. The innovative refining arrangements with Shenzhen, the integration of vaulting networks, and the development of new trading and clearing infrastructure all reflect the same principle. Success comes through partnership. The same message emerged in Singapore. So I think the two locations are very much aligned on this theme. Discussions around global standards, the future of precious metals ecosystem will not be built by individual organizations acting independently. It will be built by networks of participants working together.
Turning to the Hong Kong session, connecting major pools. Here, there was a very clear message, and Joni, you've touched upon this already. This very much being driven by demand. So we'd heard that the use of connecting the various pools across the regions will be wholesale demand driven, especially for China. Part of that is being driven by wealth management, booking centers, and we had statistics that showed that the growth prospects could even surpass Switzerland. And then finally, in terms of retail demand, China continues to be a strong growth area here. So we know that commodity markets and markets generally are inherently efficient, and demand tends to drive some of these underlying themes. We've seen that where the market needs are, where the liquidity needs are, that's where the infrastructure is likely to follow. And you've already flagged some of the functions that are slowly coming to place here. But connectivity, again, the fact that we can see onshore, offshore connections really helping to grow the region alongside with the infrastructure build out, I think will be key themes here. But also just thinking about the markets as they stand, we had a refresher in the last session for day 2 on how different centres serve different purposes. So London being the spot market, New York being a futures market, Shanghai being more of a domestic T+D market. They all currently serve different end usages. But while there are different purposes to each of these regions, we can see how they are all connected across, and then wanting to find price discovery, wanting to have multipolar price discovery, not just a single region price discovery, adds to the liquidity overall in the market. Whereas there were some concerns that we could draw liquidity away from some centres, but overall the development of clearing systems, development of infrastructure would help to create a more resilient infrastructure overall.
So that brings us to the end of the formal sessions for the first day. But typically in the previous years, I didn't really cover the Singapore Sling roundtable sessions and the gala dinner. But given that we've increased capacity with 2 people now, Suki and I decided that we were going to cover those as well. So just a couple of highlights from the Sling roundtables, for those of you who didn't manage to join it. It was basically like speed dating. So for the younger generation, before apps were available, but it was fun. Shout out to the women in PGM's table because it was the only table offering chocolates. In all seriousness, questions actually mostly revolve, at least for the ones that I managed to participate in and over here, questions revolved mostly around how things work, what is the process of applying for memberships in various industry organizations, questions that basically sort of build or imply that people want to do more business with each other, questions about local market conditions, what participants are doing in these domestic markets, and questions around outlook for various precious metals on demand, on supply. And overall, I would say there were very engaging conversations, and I hope that these roundtable discussions will continue going forward. There was not a lot of Singapore sling drinking, but probably that was for the best. On the gala dinner menu, gala dinner, my main comment, Suki, I don't know if you would agree, but that the menu itself was actually very much on brand. We've been talking a lot about gold and market activity increasingly moving from west to east. The menu was Western, but with distinctly local flavor. So, the rendang sauce, the achar, and all these things I thought was very interesting and very delicious. I don't think that was a coincidence. I think that was by design by the SBMA committee, so kudos to you guys for that. And it was such a special place to have dinner and celebrate this milestone that has been reached this year. It certainly sets a high bar for the 10-year anniversary next year, but I'm sure that SBMA will be able to deliver.
Talking about Singapore Sling, that was my first one, so I was delighted to be able to join in, and I thought the Flower Dome experience was fantastic, and that was looking at a literal ecosystem, and that was a theme that has been recurring through the conference as well, from the Deputy Prime Minister mentioning global gold ecosystems right from the start. So, as you say, purposefully designed by the SBMA, well thought out. So I was also delighted to see so many people attending the start of day 2. So you all did very well, coming back with renewed energy on day 3. We kicked off the day talking about silver and PGMs and new demand drivers. I thought this session was a great opportunity to dive deeper into some of those changing trends, looking at the impact of the Middle East conflict. And Rona did a really great job here in presenting alternative scenarios, what that impact would be ultimately for supply and demand balances. And she showed for the platinum market, her projection had the market moving into a smaller surplus that could deepen if we see more of an impact on the auto side, whereas for palladium, it had reduced her forecasted deficit. But I think what's interesting here is even with the headlines that we've had over the weekend, is that there are still various scenarios that could play out, and these can have a real impact on the underlying supply and demand dynamics. For the silver sector in particular, of course, there's a lot of focus on the solar industry, and we know that there's an ongoing trend in terms of thrifting and substitution, but this has been the case for many years, and it's not just been a function of the recent volatility that we've seen in prices. Trevor did a great job of doing a deep dive into looking at what the alternatives were, but also putting this into context in demand growth that we're seeing elsewhere, whether that's been driven by electrification of vehicles or whether that's been driven by AI demand. So it's a very close area to watch. There are risks, of course, to the demand sector, but there are opportunities for growth. So that's another recurring theme. With the different liquidity centres, there are some challenges that need to be overcome, but that's equally, there are options for opportunities too.
Thanks. And then that moves us to the 6th session, which was on sustainability, trust, and market integrity. My first comment, with this session talking a lot about ESG, would, or comment, or more of a question, how ESG focused it is that this room has been so freezing for the last couple of days that I've had to actually walk outside for a few minutes each time just to thaw from being frozen. So maybe that's something that we can look into. In any case, the conversation during this session was really centered around transparency, increasing transparency, and kind of, at least my main takeaway is that there are a lot of, groups out there that are looking into this topic, but there is a need to align on taxonomy, on standards, and this is a continued work in progress. A key takeaway for me was, the question on whether Asia is a taker of standards, or is it co-creator. And I really like that term that Doris used, which when she said that Asia is a co-creator of these standards and is definitely part of the conversation. And I look forward to how the industry continues to develop on this front. It was highlighted that there are still a lot of challenges, particularly in terms of monitoring recycled gold bars, scrap gold. That area seems to be a lot more complex, requiring a lot more due diligence. And there are still a lot of challenges ahead regarding these topics. Particularly, there are factors that are still undermining trust, which is, verifiability, and the data sharing capabilities are still big gaps that we need to close.
And then we had the highlight from the gold focus. Nikos did a great job setting the scene for the gold outlook and the following session. He did a great job summarizing the fact that we have seen lackluster jewelry demand, but we've seen tremendous growth on the investment side, and ETPs closed the year at a record high. And of course, the supply response is not instant. It's not an easy response here. But he also highlighted, and I think this is very interesting, that there's been a limited response from the recycling side. It's only up 2.8%. So there's still official sector buying, but some of the near-term factors that we need to look at are really on the macro side. With the peace deal that's been negotiated, the focus has very much shifted to changes in real yields. So their expectations for the year outlook is actually continues to be bullish. They still see the risk of inflation quite muted. It's not likely to trigger a significant rate hike. And that led us into the final session, the final discussion that we had. And I appreciated Nikos kicking it off with a price poll. Everyone loves a good price poll. And we saw that the room was relatively positive. We had 53% of the audience expecting gold to trade between $5,000 and $6,000 in a year's time, 8% around over $6,000 per ounce, and only 5% of the audience thought that prices could dip below $3,000. But by the time we conducted that poll at the end of his session, there were no votes for below 3,000. So that was a great job in highlighting the positive drivers behind the gold market. But he did start the conversation, I thought, with a very interesting question: where will prices be after the conflict? And we had a range of views. Bart highlighted the risk of prices trading between 4,000, 4,300. There are concerns around inflation, given their expectations for oil prices to remain elevated. It won't be, even with the reopening of the Strait of Hormuz, it's not going to be an instant fix. But Bruce was much more positive, seeing an upside risk back above $5,000 per ounce. And Jordan also highlighted the bull case, given that even though they had seen huge lines outside of their stores and levels may have come off, it's still relatively elevated. That appetite to buy is still very much there. We had a lot of discussions around risks from the equity markets, how retail demand has panned out, central bank buying, which I think is a key continuous theme. But the level of interest in gold continues to be elevated. Even with the stock market rally that we've seen, there's still strong interest to want to hedge some of that risk in the gold market. With that, I want to say thank you to Joni for sharing the stage with me to do the wrap-up, to share the reflections. It's been an absolutely fantastic conference. I've thoroughly enjoyed the time spending with all of you at the conference here. Key themes, of course, around trust, transparency, collaboration, addressing those liquidity pools and collaboration across the gold sector as a whole, but also that we continue to see many diverse and interesting demand trends that are emerging for the gold sector as a whole. Thank you very much, and thank you, Albert, Margaret, and Watso, over to you.
Thank you. Ladies and gentlemen, give your loudest applause